Hello everyone. I hope you are doing good. You are fit and fine mentally and physically. So, guys, we did a wonderful session yesterday. I hope you are loving it, you are enjoying it. See, initial few chapters are based on standards on auditing, and those standards on auditing are little tricky, little complicated. So, we covered around 23 questions yesterday. Today we are going to cover around 17 questions, but then all these questions are super lovely, super interesting. And as I said, initial some standards are having a lot of variety, lot of things to understand, lot of things to go in depth in. Okay, so we will be covering total 40 questions till now in 2 sessions. As we go ahead and as the chapters get simplified, we'll be covering more question, guys. So I hope you are loving it, you are enjoying it. Do uh, do keep sharing these lectures, videos with your colleagues, with your friends, and do put your comments. Your comments matter a lot. Your comments, your feedback, your love matters a lot. That keeps us going. That keeps us motivated a lot. So do keep doing that, guys. Okay, guys. Okay. So yesterday we saw a lot of good questions, and let's start today. So today we are going to start with essay 250. It's a lovely standard. It's a lovely standard, guys. Okay, come on. Now the first question. This question we will cover. This first question will cover along with one more CNO. It is in the list. Okay, so we'll come to that later. Now, let's see, guys. Now, the first question we are saying, it's a lovely question. It has been very famous. It has been very famous in the past. Very famous in the past. Asked in May 16 exam, then May 18 exam, November 20 exam. Look at the pattern. Look at the lovely pattern. So after every 2 years, it was getting repeated. After 16, it came in 18. After 18, it came in 20. So question was getting repeated every 2 years, and then suddenly there was a break. Okay, and now this question has again made its entry to November 23 mock test paper. November 23 mock test paper. So again, it is this particular question is gaining it is gaining importance. It is gaining momentum, guys. Now let's see what is the question. What are the indicators of non-compliance? So what are the indicators? What are the things which indicate that non-compliance, is happening in the company? Okay, let me tell you guys, this concept is not covered in the new study material. This concept is not covered in new study material. But then there's a question. Yes, this is going to happen. This is going to happen. 90% of the questions will be targeting the study material, will be based on study material, but then there will be 10% questions, 10% questions. So they are not in ICI study material, but still they become relevant, they become important. So it is very important that we do all the important concepts from the Audit Titanium book, and then we do all the questions from the Param question bank. This combination makes studies unbeatable, guys. Okay, guys. Now let's see. So we have made a very good shortcut to remember these indicators. Okay, so shortcut is C puppet. C puppet is the shortcut. Okay. One more thing, if anyone is from the Hindi background and watching this lecture, we have separate lecture for the Hindi. So you go to the channel and you go to the live streams, and then there you will find the lecture on Hindi. This is specifically exclusively for students from the south who are comfortable in English only. This is specially done for you guys only, especially for you guys to make full use of it and show your love for the effort which we are doing. Okay, guys. Now let's see. So C puppet. C puppet is the shortcut. C stand for country. Now C stand for country. If you see that if you see that goods and services are coming from one country but payment is made to some another country, goods and services are coming from Australia but payment is made to China, payment is made to China, guys, then that is the indicator that there can be non-compliance of the Customs Act. It is an indicator of non-compliance. Then C again stand for cash purchases. If you see lot of unusual cash purchases, lot of cash payments, generally cash payments are done to hide the identity of the receiver, and also hide the purpose of the true purpose of the payment. Lot of illegal payments and bribes are paid. So lot of cash payments, cash purchases is an indicator of non-compliance. C puppets. P stand for payments. Now there are payments through valid channels, through bank account, and payment is done to related parties, employees, government employees, but then the nature is not specified. Again, many a time nature is not specified because the nature can be illegal. Nature is not specified. There is ambiguity in that. It can be illegal, or there can be non-compliance of the Companies Act. Lot of permissions were required, they were not taken. There can be non-compliance of Companies Act. So payments are done and nature is not specified is again an indicator that they may be illegal, or maybe the Companies Act approvals are not taken. It is an indicator of non-compliance. Puppet. U stand for unauthorized transaction. If you see a lot of unauthorized transaction, that means seniors and managers don't want to take responsibility of such transaction because something is wrong in that. Again, it is an indicator of non-compliance. Then P stand for prices. If you see that the prices of the transaction is very high or low, maybe they want to divert profit from India to Dubai. Suppose you're doing transaction from Dubai, you're buying at heavy prices and selling at low prices. That means you want to show losses in India and profit in Dubai so that your profits are not taxed as per income tax. That can be indicator that there is an issue with transfer pricing. There's a non-compliance of the Income Tax Act. Puppet. P. Then A stand for agent fees. If excessive agent fees is paid, generally there is upper limit how much agent fees is paid. If a lot of payment is made, again it is an indicator of non-compliance, guys. T stand for tax havens. If transactions are done with tax havens, if transactions are done with tax haven, again it is transaction is done with tax haven, again it is an indicator of non-compliance, guys. It's an indicator of non-compliance. If exchange documents are not present, foreign exchange transactions are happening without proper document, it is an indicator of non-compliance with FEMA Act. So C puppet is the shortcut. C is for country, C is for cash purchase and payment, then P is for payments where nature is not specified, unauthorized transaction, P is for prices, A is for agent fees, T is for tax haven, E is for exchange control documents. Okay, so if you see these things, then you sense that it is an indicator of non-compliance, guys. It is an indicator of non-compliance. Now as we go ahead, guys, okay, there are more factors. So some of the factors we plan to remember them with the help of a mnemonic. Now the other factors we plan to remember them in a particular flow. Just think about it. What happens if non-compliance is there? If non-compliance is there, there will be investigations. There will be authorities, police, CBI, CID, they will investigate. They will do investigations. Then you will be appointing lawyers. So there will be a lot of legal payments, legal fees. Then lot of documents will be destroyed. There will be break in the audit trail. Documents will be destroyed. There will not be documents and records and register in proper mannerly arranged because you want to save yourself. then there will be adverse media coverage. Media will be saying wrong things about you. So after non-compliance, so again it is an indicator of non-compliance. Having lot of investigation, appointment of lot of lawyers with the legal fees, then documents are going missing, audit trail is not there, adverse media coverage is there. All these are indicators of non-compliance. So some of them you can remember with the help of a mnemonic, and some of them you can remember in this particular flow, guys. So it's a wonderful, lovely topic, lovely concept, indicators of non-compliance. Now, let's see, guys. Now, going ahead, guys. Now, if you come across suspected non-compliance, if you come across suspected non-compliance or actual non-compliance, then as an auditor, what you should do? Okay, we need to explain that. Okay. So there's a very famous case that you are doing audit, and during the audit you came across a situation where you see that there are hundreds of children, underage children, they are working in a factory. Okay, so it is a non-compliance of Child Labor Act. It's a non-compliance of Child Labor Act. Management is saying is none of your business. Child Labor Act doesn't have any direct impact on financial statements, so it is none of your business. You should not go into it. It's not in your scope. Okay, it is not in your scope. Now listen, guys, it's not in your scope. That's what they want to say. It's not in your scope. Again, the same case they have elaborated a little bit, and they want to say that it's not there in your scope. Okay. Then, and what as an auditor we are supposed to do? Now this is lovely. Now this question was drafted in the recent study material, that there's a company and a GST investigation is happening on the company because company has issued a lot of fake invoices. So a lot of fake invoices and investigation is going on. What as an auditor we are supposed to do? Fictitious. What is the responsibility of the auditor for possible non-compliance? What is the responsibility of the auditor? What is responsibility of the auditor for possible non-compliance? Okay. Now listen, guys. So what are we supposed to explain here? So whenever you come across a situation of possible non-compliance, okay, possible or suspected non-compliance, what are we supposed to do? Let's see. The first thing is that you are going to give reference of SA 250 and the name, and in one line what it is all about. It explains responsibility of the management with respect to law compliances, and then responsibility of the auditor with respect to law compliances. Okay. Then you explain the first thing. SA 250 divides laws in two parts. Laws having direct effect. It divides law in two parts. Laws having direct effect and laws having and other laws. Laws having direct effect means laws which are directly affecting the industry, directly affecting the financial statements, directly affecting the incomes, expenses, then they are called direct effect. And then apart from that, laws which may have an impact, which may have a material impact, a big impact on the operation, they are called other laws. So in direct effect, generally Schedule 3 has a direct effect on financial statements. RBI regulations, RBI circulars, IRDA regulations have direct effect on the financial statements. Then Income Tax Act, GST Act has a direct effect on financial statements. Provident Fund has a direct effect on financial statement. Gratuity bonus has a direct effect. Then we'll talk about other laws. Then in that we'll talk about Industrial Dispute Act may have an impact. Industrial Dispute Act. Environmental law may have an impact about other laws. So you are going to discuss direct laws versus other laws. Then you are going to explain, when it comes to direct laws, we are supposed to check compliance. That means we are supposed to sit with all the important section and in requirement and check whether there is a compliance of all the important requirement. We perform all the audit procedure which we feel are required. Okay, then that is a direct effect. In other laws, we change the approach. We focus on whether there is a non-compliance. So we don't check a compliance, whether there is a non-compliance, and for that we only perform two audit procedures. Inquiry, we simply ask, this is the list of the laws, please tell us. We ask this question to management, TCWG, legal head, please let us know whether there is any instance of non-compliances in these particular laws. We simply go and do inquiry, and then we check correspondence. That is communication. Correspondence means communication between the company and the regulatory authorities. What are they talking to each other? Whether there are show cause notices, whether the regulatory authority is unhappy. We simply see these two things and try to find out whether there is non-compliance. So it first needs to explain that yes, laws having direct effect are within our scope. There is an approach of checking it. Laws, then other laws, they are also within our scope. There is an approach of checking it. So if any management is saying, is it in within your scope? Yes. Direct effect laws are within our scope, and other laws which have material effect, both are in our scope. You're first supposed to explain this. Then, first supposed to explain this. Then you're supposed to explain that if you come across suspected non-compliance, or you come across non-compliance, what as the auditor you are supposed to do, what your auditor is supposed to do. So just imagine that you are in a factory and suddenly you listen to hundreds of children talking to each other, and you go and see that there's a big shed and hundred children are working there. They are working there. What will you do? First thing is, we understand the circumstances. Is it a one-time activity? Is it a regular activity? Who has contracted them? Who has brought them? We try to understand the circumstances and what exactly they are doing. Are they testing something? Are they packing something? Are they working? So we'll go and understand what exactly they're doing. We'll come back to our cabin and we'll try to understand, download all the recent law, rules and regulation. We'd like to understand what is the latest law, rules and regulation, what it says. So the first step is understanding the circumstances and the nature of the act, and understanding the law, rules and regulations. Then we will sit with our team and find out the impact, what kind of impact it will have, what kind of impact, guys, what kind of impact it's going to have on incomes, expenses, assets, liability, going concern issues. We would like to understand the impact on financial statement. What kind of impact is there on the incomes, on the expenses, on the assets, on the liabilities, and also on the going concern. Is it troubling going concern? Is it having any impact on the going concern? We will see that impact also, guys. That's going to be extremely important. Then once we see the impact, then we go and meet the management. And we meet management, TCWG, explain them that we came across this situation. It appears to be non-compliance, and this is the impact on financial statement. Please share your point of view. Whether it's a non-compliance and what will be impact on the financial statement. Please explain us. Please go in depth in what is the situation, what is the law, what is the impact. Please give your inputs and detailed inputs with respect to this. If we want, we can go for the legal advice also. Okay. After doing all this, if we feel that no, we are confused, we are not able to understand the situation properly, we are not able to understand the law properly and its implication and impact properly, there is no sufficient appropriate evidence, we'll qualify or give disclaimer. We will qualify. Okay, we'll qualify or give disclaimer. Qualification or disclaimer. But then, guys. But then, if there is a misstatement straight away, see, you are supposed to book provision of 50 crores, you have not done that. There is straight away misstatement. We'll go for qualification or adverse. Guys. And we'll sit back and think implication on other aspects. Management kept this hidden from us. So we will re-evaluate. Are we supposed to increase the risk at financial statement level or risk of any particular area? Then after increasing risk, are we supposed to perform more audit procedures? Can we rely on all the written representations, all the information they have given to us till now? So guys, it's very simple. The first focus is understanding the situation, circumstances, and the law. The next is impact. The next you go and discuss. You may not find all the information, qualify disclaimer. You may come across material misstatement, qualify adverse. And you simply sit, this information was hidden. Think about whether risk needs to be changed, whether audit procedure needs to be changed, audit procedure needs to be changed, and whether you should show reliability of the written representation. So you're supposed to explain that if laws with direct effect and laws with direct effect and other laws with direct effect. So you're supposed to explain laws with a direct effect and other laws. You're supposed to explain both of them. You are supposed to explain both of them and say that then ultimately yes, it is within our scope. And if there's a non-compliance, these things should be done. So give reference of 250, focus on these two concepts, direct effect versus other laws, and the approach in case of suspected or actual non-compliance. Okay, discuss the case and simply explain this should be the approach of the auditor. This should be the approach of the auditor, and if required, he can make the reporting as discussed above. So it is pretty clear, guys. It is pretty clear that they may ask, is it within your scope? Yes, it's within your scope. Explain these 2 points. It is definitely in our scope. Okay. As a precaution, you can keep explaining both the things, direct effect versus other laws and suspected, identified non-compliance, both the things. See what happens, institutes sometimes only explain this point and sometimes they explain both the points for a similar question. Why to take chances? Let's always keep your answer on the higher side. So if you come across any suspect or actual non-compliance, explain both these concepts without any hesitation. Explain both these concepts without any hesitation, direct effect, other laws, and suspected, both these points. Okay. So it's a lovely standard. It is a lovely standard ASSE 250. ASSE 250, first we saw indicators of non-compliance, and then we saw what to do when we come across suspected or actual non-compliance. We focus on two concepts. Now guys, now the next thing is, guys, next thing is it's again a lovely case. It's a lovely case, pending proceedings. So here there is not just a non-compliance, but they're talking about the pending proceedings, and they're very big proceedings. Okay, let's understand, guys. So what's the issue? So basically, there's a show cause notice from National Green Tribunal. National Green Tribunal has gone show cause notice, and they explain that company is doing a lot of bad things. Company is polluting the environment. They are dumping polluted items, wastage, without treating them. They are dumping them in the ground, in the forest, and they're polluting everything, and people are unhappy with them. And National Green Tribunal has imposed a fine of whooping 500 crores, and their profits are around 35 crores and turnover around 100 crores. If something like this happens, they are gone. Going concern is over if that happens. So as an auditor, what will you do with it? As an auditor, what will you do with it is the question. Now listen, guys. Again, now here, again a litigation is pending. Litigation, straight away litigation is pending. Okay. Now, what they have given as an answer and what we could do. Again, there is a non-compliance, so they are applying 250, 570, 143. Okay, let's see one by one. So in ASSE 250, they're explaining if there's a direct effect laws, you go and check compliance, perform as many audit procedures you want to perform, but in case of other laws which may have a material effect, in case of other laws where there can be impact, you go and check only non-compliance. Okay, you go and check only inquiry. You do only inquiry. You simply ask questions where there's a non-compliance of so and so laws, and you go and check correspondence with the authorities. That's the only two things. You can also explain Okay, you can also explain about the non-compliance. You can also explain they have not done that. They have not done that. Can explain as a general rule. You can also explain, okay, there are two types of laws. There are two types of laws involved, and this law will be covered in other laws. So it is within our scope. It is within our scope. You can also explain what should be done when there should be suspected or actual non-compliance. You can include this point. See what institute is doing. Institute, sometimes it includes response to non-compliance. Sometimes it doesn't include. Sometimes they include it, sometimes they don't include it. So as a general rule, you should always have more things. You should always write more things instead of less things. So guys, whenever they talk about SA 250 non-compliances, talk about direct effect and other laws, and also talk about non-compliances. Now the interesting thing to learn here is this one. This is not directly written, but this is what Q&A practice teaches us. 500 crore penalty, if that comes true, 500 crore penalty, if that comes true, they are gone. They are completely gone. It will invalidate their going concern. It will definitely invalidate. It will definitely invalidate their going concern, guys. That's the most important thing. And in notes to account, they have simply explained that litigation is pending. They have not explained the amount. They have not explained the details. Nothing, nothing, nothing. Now, if someone has practiced this question before, that person will be able to track it. It's a lovely question of May 22 RTP. May 22 RTP. You have to apply 570 also. So you have to say that, listen, this case is huge. 500 crores is huge. It is a material uncertainty. Material uncertainty means uncertainty where going concern depends on happening or non-happening of future events. Now here going concern depends whether we are going to win or lose this case. So this litigation is not a simple litigation. It is a material uncertainty because it is affecting going concern. So you need to explain that it is affecting going concern. If any uncertainty which affects going concern, it's called material uncertainty. Point number one, you need to explain. So point number one, you are supposed to explain. Then you are supposed to explain that there should be adequate disclosure. There should be adequate disclosure of this material uncertainty in notes to accounts. So in notes to account, you're supposed to explain principal events and conditions. You need to explain the legal issues and legal problems, that show cause notice is there, case is pending, the proceedings are pending, green tribunal, and all the details need to be given. And then a statement of warning should come that this is a material uncertainty. And because of material uncertainty, company may not be able to realize its assets and pay its liability in normal course of business. Realize its assets, realize its assets, realize its assets, realize its asset and pay liabilities, realize its assets and pay liabilities in normal course of business. They may not be able to do it, guys. They may not be able to do it. You need to explain that. If the disclosure is adequate, that's good. But looking at the problem, we understand they have not given proper disclosure. They have not explained principal events and condition in detail. They have not explained the amount of 500 crores. They have not written that it is a material uncertainty. They have not given the warning that because of these assets may not be realized in normal course of business, liabilities may not be paid. There is no adequate disclosure. They are supposed to explain if there is no adequate disclosure, then this is something wrong happening. Something wrong is happening, then this is not good. Something wrong is happening with the people. They are not being told the truth. You will have to qualify or give adverse. In this situation, either you have to qualify or give adverse. So as per SA 705. So this is the highlight of this question, that you need to understand that we need to apply SA 570, explain MU, explain adequate disclosure, and if there is no adequate disclosure, what to do. Then this very interesting section 143 subsection 11, section 143 subsection 3, there is a rule 11. In rule 11, you study in Companies Act, auditor is supposed to comment whether proper accounting and disclosure is done with respect to litigations. So even that will be attracted. You're supposed to give its reference and requirement also. So first you are supposed to explain as a 250 direct effect laws and other laws, and what to do when there is a suspected possible non-compliance or actual non-compliance. What to do? You're supposed to explain those two concepts. You're supposed to explain as a 570, then as per section 143, rule 11, the most relevant thing is written first. The most relevant is as a 250, then the next is 570, then the next is section 143. Rule 11. Discuss the case and simply say that definitely it is within our scope. It is within our scope, and because these guys are not doing proper accounting, we'll have to qualify. No, we have to go qualify or give adverse opinion. Okay, and we'll have to do reporting under rule 11 also, that it is not appropriate. So it's, guys, it is lovely and a beautiful question, and it is coming straight away from May 22 RTP. So it becomes extremely important, guys, extremely important. So guys, it's a lovely standard. It's a lovely standard. We have discussed the indicators. We have discussed the indicators of non-compliance. We have discussed what to do when there is a suspected or actual non-compliance. What to do when there is a suspected or actual non-compliance. Okay, and a beautiful case where even the going concern is getting affected. There is a material uncertainty over going concern. Now, okay, in the Hindi session, I missed this particular question, but then I missed this particular question. So let me cover this question. In Hindi, I missed it, but then right now I see that, okay, I missed this question. Now, discuss. It's again a question based on study material. It is again a question based on study material. Discuss why potential effect of inherent limitation of auditor's ability to detect material misstatement disclaimer 200 are far greater in respect of non-compliance with law and regulation. Okay, listen, guys. I have given reference. I have given reference of the concept number also. I have given reference. Of the non-complex of the concept number also. So let me cover that. Let me cover this particular thing. It's very simple. If we go to this particular concept number 250.080, okay, so you explain it's very simple thing. You explain it's a very simple thing. You explain overall objective is to give opinion whether financial statements are as per applicable framework. If it is a fair presentation framework, then we also need to tell whether it gives true and fair view, and we have to give it with reasonable assurance. So first to explain the overall objective. Then you explain that we are giving reasonable assurance because there are inherent limitations, there are issues and challenges in the audit process. There's a shortcoming. And then you explain because of the shortcoming, it is again very difficult to detect non-compliances, and it is further very difficult. Why it is so difficult? To detect non-compliances? Okay, maybe you can have why? Because of code R. You can simply have because of code R. C stand for concealment. Many time companies, whenever they do non-compliances, they conceal these things. They collude with the employees and ask everyone to stay mum, not to speak about it. When there is a non-compliance, they may manipulate the documents and hide. So a lot of time people collude and conceal the instances of non-compliance. That's why it's very difficult to detect it. Then many of the non-compliance are with respect to operating aspects. They are with respect to machines and the shifts and the time, how employees are working. It is with respect to pollution and production process and so on. Because as an auditor, we don't understand the operational aspect so much. we may not be able to aware about, we don't understand the operational aspect so much, we may not be able to understand that a particular law has been breached, we may not be able to understand the non-compliances. So because there's a concealment, we are not able to detect non-compliances because it is of operational aspect, we are not able to do that. Then determination whether a particular situation is non-compliance or not is many a times it is matter of a debate. It is a matter of a debate. It is a matter of dispute. Because many times it is a matter of debate and dispute, it is difficult to determine whether it's a non-compliance. Because of that, again, we may miss a lot of non-compliances because determination is difficult, it is subjective, it is complicated. So we may not be able to detect it. And then R stand for removed, or we can say reflected, not reflected in financial statement. A lot of non-compliances doesn't have direct financial impact. Doesn't have direct financial impact. If you are making employees work more than the prescribed hours, you may not see directly the financial impact. If you're not giving adequate facilities to employees, it may not be reflected in financial statement and books of accounts. If you're not giving proper service to women employees, it may not be reflected in the financial statement. Because a lot of non-compliances don't get reflected in financial statements, again it is difficult to detect it. Let's freeze, guys. So question was, why is it so difficult to detect non-compliances? You explain our overall objective and there's an inherent limitation. Because of inherent limitation, it's very difficult to catch hold of non-compliances. Further, in non-compliances, there are more issues. Code R. There's a concealment issue. Then O for there is a concealment issue. Then O for people. People may not be, we may not be aware about the operational aspect. That's the problem. D for determination is little challenging whether the non-compliance has happened or not. It is challenging. And R for if it is not reflected in books of accounts. If it is not reflected, if it is not reflected in books of accounts, then again it is difficult to detect it. So guys, good that it is covered in the English session. I will cover it for students of Hindi later on. So lovely concepts. As I feel APSE 250 has a lot of importance in the new course. A lot of questions can be asked from here. A lot of questions can be asked. So we are through with a lot of interesting thing, guys. Okay, now let's see. Now a chartered accountant is appointed. A chartered accountant is appointed, and guys, the chartered accountant is appointed as a CFO. He's not appointed as an auditor. He's appointed as a CFO, and he's worried about the non-compliances, and he's asking what kind of policies and procedures should be there to ensure compliance of laws. He's asking for policies and procedures. APSE 250 explain what is management responsibility, and what kind of policies and procedures can be framed for management's responsibility. So this question is not on the auditor, this question is on the management. What kind of things management should do for the compliance of law, rules and regulation? Again, a very interesting thing. It has been asked in November 20 exams, and again it was introduced. In November 23 RTP. So after 3 years, so almost after 3 years, it was again repeated, guys. This shows that institute uses its past database a lot for drafting questions. So questions may come from here only, but the way they are drafted may change. Okay, now let's understand, guys. So first, need to explain, yes, management is responsible of ensuring that all the important law, rules, regulations are complied with. It is their compliance responsibility for sure. And for that, what they're supposed to do, so you can write on your own, maybe. For that, they should establish a legal department. They should be experienced legal head. And experienced legal head. There should be code of conduct, expense legal head and good number of team members. There should be code of conduct. What should be done on weekly basis, what should be done on monthly basis, quarterly basis, half yearly basis, annual basis, what things need to be done. Okay, what things need to be done. So there should be code of conduct. What things need to be done? There should be code of conduct. How people should operate. Code of conduct should be there. Code of conduct should be there, and people should be trained. People should be explained that this is the code of conduct, how you are supposed to implement it, and proper record should be kept. Proper record should be kept. Okay, these are the important provision, these are the permissions taken, these are the records which are kept as per law, these are the intimations sent to them, and so on. Detailed record should be kept with respect to law compliances. So yes, it is management's responsibility. These things should be done for, and it's in logical process. A legal department, a legal head, good team, and then code of conduct, it's training and record keeping. There should be monitoring. On continuous basis, there should be monitoring. There should be monitoring, there should be supervision, whether proper compliance with the law, rules, regulation happening or not. Just like you have MIS, Management Information System, every month or every quarter, they are going to tell you, are we achieving our revenue targets? Are we achieving our cost target? Are we achieving our profit target? We will be discussing that. Just like you monitor your incomes and expenses and profits, on the same lines, there should be monitoring and evaluation of compliance with law, rules, and regulation. About the law, rules, regulation. So there should be a procedure for monitoring. So there should be procedure. People should be deployed that you are responsible for monitoring. This is to be done on quarterly basis. These are the steps you are supposed to perform for that. There should be procedures. You can take help of legal advice if you feel that things are complicated and you need help. You can take assistance of legal advisor for the monitoring purpose. That legal advisor will do the monitoring for you. In large entities, the monitoring thing is given to audit committee. If they are not there, internal auditors, if they are not there, compliance officers are supposed to do it. So let's freeze, guys. Only three things. First, yes, it's responsibility. Then how it will be implemented. The very simple way of implementing, just imagine about the legal department. And finally, monitoring should be done. Either legal advisors will do it, or there are people who will be doing the monitoring. So this question is about management responsibility. It is not about auditor. It is not about auditor. What is management responsibility with respect to law, rules, and regulations and their compliance? How to ensure compliance? Again, lovely, guys. This essay has to offer lot of good things. So we are through with essay 250. It was wonderful. There was a question on indicators. There was a question whether the laws are relevant or not. How to go for suspected non-compliances. Wonderful. Okay. And then what is responsibility of the management? We saw that also. There were lovely questions and lovely answers. You should understand the heart of the question. And you should also understand. You should understand the heart of the question, and you should also understand. You should also understand what are the key points which were targeted. What were the key things which were targeted, guys? Okay. Now come next to, it's again lovely. It's wonderful. Okay. So guys, the question is about communication to TCWG. The question is about communication to TCWG. Question is about communication to TCWG essay 260. A beautifully drafted question. They say that it's a listed company. And auditor is planning to communicate three things. They are asking what is missing in it. They are asking what is missing in it. They are asking what is missing in it. What is missing in it? They're asking that, and then they're asking, first of all, what is missing, and then if what is missing and whatever is missing, you explain that matter in detail. Not just that, explain that matter in detail. So you should be aware broadly what things need to be communicated to TCWG. And within that broad points, there are sub points also then later on. Okay, let's understand. So you need to explain that broadly four things need to be communicated. Four things need to be communicated to TCWG. You're supposed to communicate four things, guys. So what four things we are supposed to communicate? So we are supposed to communicate four things. That just after appointment, we should go to TCW and say, and we should communicate about our responsibility. That we are the auditors, our responsibility is to give opinion whether financial statement as per applicable framework, and it's a fair presentation framework, whether it gives true and fair view. Our responsibility is restricted to giving this particular opinion. That's the only responsibility we have. It doesn't change your responsibility. You are still responsible for preparation of financial statements. So we explain, we clarify just after appointment, this is my responsibility and this is your responsibility. There should not be any confusion and misunderstanding with respect to that. Okay. Then before doing the audit, you are supposed to go and explain planned scope, overview of planned scope. What is the overall planning and timing? We are supposed to explain this to the client, so that client is prepared accordingly. It keeps record documents ready. It keeps its stuff free for the audit process. So some communication after appointment, some communication before starting the audit, and some communication during the audit. During the audit is supposed to communicate all the significant findings, all the important findings of the assignment. And in listed company, he has to make an additional communication with respect to independence. So in general, auditor is supposed to talk about three things, and when it comes to listed company, when it comes to listed company, is further supposed to talk about the independence also. He is supposed to talk about the independence also, guys. Okay. Now in this we realize that, okay, significant findings is missing. So we are supposed to explain significant findings. Now in titanium, if you have titanium concept book, you can use titanium concept book. If you have titanium concept book, you can use titanium concept book. And if you're not having titanium concept book, it's fine. You can use any of your concept book. So in titanium concept book, there is 260.120. So 260.120, we are discussing about significant findings. And there is a shortcut, DAKU, that simply means criminal. DAKU. So that's in Hindi, that simply means criminal. Okay, what is significant finding? DAKU is a significant finding, criminal is a significant finding. So we are supposed to explain D. So in significant finding, we are supposed to explain, did we come across significant difficulties? Did we come across difficulty in performing the audit? That people were not responding, that is a significant difficulty. They are responding very late, that's a significant difficulty. We have to make a lot of efforts to get very simple information, that is significant difficulty. So when we talk about significant finding, D is for significant difficulty. Facing significant difficulty is a significant finding. Okay. Then significant audit matters. The very important audit matters, like all the big matters, like if we come across initially significant risk is a significant matter. Then we come across significant internal control deficiency, that's a significant matter. Okay. Okay. Then that is significant audit matter. Then we are modifying our opinion affecting audit report, that is a significant matter. Apart from that, at the end, we are asking for written representation on certain matters. Again, that's a significant finding, guys. So DAKU, D stand for difficulties. So in significant finding D, the most important things will come significant difficulties faced. Then the audit matters, significant audit matters, and wherever we need written representation, that is significant finding. Then A, all the matters which are affecting audit report. Even that will be covered. And the qualitative aspect, what is the quality of the accounting? What is the quality of the accounting and quality of financial statement? What is quality of accounting? What is quality of accounting? What is quality of accounting and quality of financial statement? It is generally determined how good are AED, accounting policy estimates and disclosure. If they are very good if they are very good accounts head, good team, good software, there are regular discussions, consultations, and then they go for the accounting and financial statement, that's called very good quality. We're supposed to comment on qualitative aspect of the financial statement, books of accounts and financial statement preparation and other matters. So DAKU, significant finding is DAKU. D stand for difficulties. So we are supposed to share significant difficulties. We are supposed to share significant audit matters and request of written representation, then anything which affects audit report, then the qualitative aspects and the other matters. Okay. So the point of significant finding was missing. The point of significant finding was missing, guys. We are supposed to talk about significant findings. Again, a lovely way of drafting it and asking it. Lovely way of drafting it, lovely way of drafting it, and lovely way of lovely way of drafting it, lovely way of asking about the concept. Now, this is a lovely case. This is a lovely case, guys. Wonderful case. This is, guys, this is a lovely case. This is a lovely case. This is a very interesting case. A mind-blowing case. And again, it is coming from the new study material. New study material is explaining us loads and loads of lovely questions to us. Loads and loads of lovely questions to us, guys. Okay, let's see. Let's see. Just give me a minute. Just a minute, guys. Just a minute. Okay, let's see, guys. So as I said, it's a lovely question to discuss. Students of South India, I expect a lot of love from your side for the efforts we are doing. So once this video ends, do put your lovely comments out here. Do share these videos with everyone. So we reach more and more South India students. Okay, because your love, your comments, your interactions, your engagement, that takes our teaching to the next level, guys. That takes our teaching to next level, and that is what we expect from you guys. Okay, 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 guys. Now let's see. Let's see. Now, so this is a very lovely question. Very lovely question. Very lovely question. Very lovely question with respect to communication. So it's a listed company. So understand one thing. So like we have discussed in engagement quality control review. We have discussed in SQC 1 and SA 220 that if it's a listed company, EQCR has to do additional things. EQCR has to do additional things. We saw in the last lecture, he has to do additional things. Okay, he has to do additional things. We have discussed CID. We have discussed CID. Okay, additional things. Now, on the same lines, in SA 260, if it's a listed company, we are supposed to communicate about independence. So what's happening here? Let's understand, guys, what's happening here. What's happening here? So auditor says that I'm doing audit of listed company. I think my team is independent. there is no instance of any threats to independence. There is no situation. There is no situation. There is no situation where there is no situation where there is no situation where there is a stress, where there is a stress on the independence, stress on the independence or pressure on the independence. When there are no independence issues, why should I communicate about independence to TCWG? I should not communicate about independence to TCWG. It's a lovely case, a very interesting case. Okay. 260.200. So you can also go to your concept book, or if you're having titanium, you can go to that 260 260.200 260.200, and it clearly explains that okay, if it's a listed company, we have to do additional communication with respect to independence, and we are supposed to communicate three things. We are supposed to give a statement that I would like to assure everyone in TCWG that me and my team have fulfilled the ethical requirement. We are ethical as well as we are independent. It is mandatory. It is mandatory to give this statement. It is mandatory to give this statement to make this communication. It is mandatory to give this statement to make this communication irrespective of, okay, that's very important. Irrespective of whether there are independence issues or not, then they're supposed to explain all the relationships all the relationships like personal relationships, financial relationship, business relationships. Okay. All the relationships need to be explained, whatever are there, which may affect, which may affect independence. If there are, you're supposed to explain, apart from relationship also, how much you are earning directly, indirectly through audit assignments and also through non-audit fees. You're supposed to give a breakup, how much you're earning directly, indirectly with your firm or other firms in the through audit, and how much through non-audit. So information needs to be given, relations and the fees, information on relations and fees need to be given. And the third thing, also explain about the safeguards, what you have done. Have you asked your team to sell off the shares, whether safeguards, whether you have asked your whether you have changed the team members so that there are no independence issues. Okay, so have you restricted the shareholding? Have you restricted that no relatives will come in the team? Have you increased the supervision and have you increased the supervision? Have you increased the supervision? Okay, supervision and review. Have you increased the supervision and review of some of the team members? These are the safeguards to reduce threat to the acceptable level, eliminate threat or reduce threat to acceptable level. So each and every auditor in listed company is supposed to communicate these three things about that we are ethical and independent, relations and the fees, and the safeguards we have applied. So the contention of the chartered accountant is not appropriate. Shelley is not, the contention of Shelley is not appropriate. Communication needs to be done. Communication needs to be done, guys. It has to be done. Communication is required. That's a lovely question. Irrespective of, even if there are no threats at all, communication will be required. Then significant difficulty. So auditor, he goes to audit and he's facing a lot of problems. So what can be considered? Give examples of significant difficulties. You need to understand, in significant finding, there is a concept of significant difficulty. And then we can understand what are the different things which will come in significant difficulty. It's a May 22 RTP. It's a May 22 RTP question, guys. Now, we have made a shortcut dumb. So if you want to remember significant difficulty, the shortcut is dumb. Okay. Dumb people create significant difficulties. So that's how you can remember. Dumb people create significant difficulties. Dumb people create significant difficulties. Okay. So guys, this is the concept significant difficulties. Dumb people create significant difficulties. So D stand for delays. So if you go to audit and you see that there is unwillingness, people are not ready to give loads and lots of information, or there is this big delays, significant delays getting information, that will be termed as a termed as a significant difficulty. Then unexpected efforts are required. Lot of efforts. You have to walk 2 kilometers to get a voucher. Unexpected efforts are required to collect, analyze evidences, information. That's a significant difficulty. Then you stand for unavailability of the information. Trial balance should have been ready. Depreciation working should have been ready. Interest working should have been ready. It's a common sense. The most expected information is unavailable. They have not yet made the information. That's a significant difficulty. How we are supposed to do audit? Management unwillingness to assess going concern. Management is not ready to help us in assessing going concern. That is significant difficulty. B stand for brief time. So D is delay and unwillingness. U is unexpected efforts. U is unavailability of information. M is management unwillingness. B is for the brief time. B is brief time. So if you come across such things, guys, if you come across such things, then they are significant difficulties. Then guys, they are significant difficulties. Okay. Now, so that was again, it was a simple, I won't say it is a case study question. It was very simple, that explained, give examples of what things come in significant difficulty. But then you have to see, that's the key out here. You cannot cram line by line, but you need to remember the points. You cannot cram line by line. But you need to remember the points. And moment you remember points, you're doing good, you're doing great. Now, next is communication. Oh, that's a lovely question. Communication of key audit matter. So when this question comes, so they are discussing that, so we have come across a key audit matter. Now it's what about communication? This question was first asked November 18 RTP, and from there it was missing from the action for so many years. It was out of action, and suddenly you see that question in study material 23. Suddenly you see that question, you see that concept being targeted about the, okay, so I hope you are aware key audit matter. So during the course of audit, matters matters of most significance, where auditor has given a lot of efforts, matters of most significance, where auditor has given lot of attention, lot of efforts, they are called key audit matter. Now we are talking about communication of key audit matter. 90% students will answer this question as per SA 701, because the key audit matter word is used again and again lot of times. But here you were supposed to communicate. Here you were supposed to communicate, talk as per SA 260. Now guys, I have given the complete answer. And but apart from that, I have made a very beautiful chart, and this will covers the whole thing. Okay, let's understand this, guys. So we have SA 260, and what SA 260, guys? Be positive. Whatever questions we are discussing and whatever answers we are having, try to feel the key point of the question and key point of the answer, and master these questions first. This will be your one big, very confident, big giant step. Master these questions. Then apart from that, try to master the other questions. Try to master remaining other questions, guys. And then maybe more concept. This is the step by step how you move. You have to, the most important thing you are covering first, and the next important thing, and the next important thing, and you will be ready with a wonderful, beautiful preparation. You are ready to take on the exams and achieve good things, guys. So you have to go step by step. You have to go step by step, guys. Okay, let's see, guys. So let's see. So the first thing, so the first thing, the first thing you are supposed to, the first thing you are supposed to say is that as per SA 260, it says that all the key audit matters should be communicated to those charged with governance on timely basis, on regular basis. Then further it says that at planning level, at planning stage, if you think some of the matters can become key audit matter, then when you are explaining overall plan, and scope of the audit, along with that, you also make communication. About the key audit matter, that these are the probable key audit matters which we are going to report in the audit report. Keep them informed. Then reporting stage communication. At the time when reports are getting finalized, draft the audit report with key audit matter, and give that report again to TCWG that, listen, this is the kind of reporting we plan to do. So share with them the draft report also. So communication should be on timely basis, communication should be at the planning stage, communication should be at the drafting stage also. And there's a benefit to auditors. By doing this communication, there will be robust two-way communication on the most important things, that is the key audit matter. A lot of information will be exchanged by both. They will talk to each other, and auditor will get immensely benefited with this communication. He will be able to get lot of insights and understanding not having before. Lot of different thing, he will be getting a lot of insights, lot of new information. He will be able to better understand the key audit matter and do better audit about it. Loads of benefit to the auditor. Then then apart from this, there will be loads of benefit to TCWG also. Apart from this, lots of benefit to TCWG. First of all, communication to them recognizes that they are very important part of the organization, so it is good for them. It recognizes their importance in the audit process. Then they will be able to understand the matter properly, and they will be able to give more information and clarification. So this recognizes they are very important for the audit process. They can understand and they can give more clarification with respect to key audit matter to avoid confusions. And when they know that this key audit matter, they can give more and more disclosures in the financial statement so that users are not confused with respect to key audit matter. So it is beneficial for them. It recognizes their importance, it's beneficial for them. More understanding and clarification is beneficial for them. Enhanced disclosure to avoid misconfusion, again beneficial. So simply focus on these things. They are supposed to explain what SA 260 want, what kind of communication with 260 wants, and then benefits to auditor and benefits to TCWG. So guys, we are through with again a lovely, we are through with a lovely SA 250, lovely SA 260 also. We are through with 250 also. We are through with 250. We are through with 250 also, and we are through with 260 also, guys. Okay. Now we are going ahead. Now, okay, there is a lag, guys. Okay, wait. Okay, guys, there are some internet issues. So one network didn't work. One network didn't work. The next network didn't work. So finally, some third network has started. Don't worry. So whenever there is a lag, I will stop teaching so that you don't miss anything. Now, guys, we are going to the next. We are going to next very interesting. We are going to next very interesting standard, and next very interesting standard, and this is essay 299. Okay, essay 299. Lot of lovely questions, lot of lovely questions, lot of lovely questions are covered here. Lot of very good things are covered here. Let's see, guys. Now, the the first concept is mind blowing. The first concept is mind blowing. What a question! What a question they have drafted. Amazing question they have drafted. Okay, so what is the case over here? So there's a bank, and there are joint auditors, and they have said that okay, IT systems of the bank is a common area. They have decided IT system of the bank as a common area. We will collectively do this audit. We will collectively audit this particular area. Collectively audit this particular area. So they say that. Now, they have taken important decisions on how to check it. They have done planning. They have taken important decisions with respect to this area. They have taken decisions with respect to planning. And then they have said that okay, suppose we are supposed to do four things. We are supposed to do four things. First firm, you execute this task number 1, second for task number 2, third one task number 3, fourth one task number 4. And now one of the firms didn't execute the task. One of the firm didn't execute the task of that particular area. Didn't execute the task. Didn't execute the task of that particular area. Now that's the most interesting thing, guys. Now, so that particular area, and then subsequently, so that particular things was not checked. Now, who will be responsible? Whether all the joint auditors will be responsible because it was a common audit area, whether all the joint auditors will be responsible because it is a common audit area, or only that firm will be responsible which has not executed thing. So that's a very interesting thing. And they have asked us, so first we are supposed to explain what comes under joint and several responsibility, and then what comes under individual and separate responsibility. What comes in joint and several? What comes in joint and several? What comes in joint and what comes in joint and several, and what comes under separate responsibility? These two things need to be done. These two things need to be discussed, and automatically we'll get the answer who is responsible. So let's understand. So I have taken this concept straight away from the titanium book in the same sequence, same flow I am writing. So first of all, the first thing is, where do we have joint and several responsibility? Where do we have joint and several responsibility? First of all, there is a joint and several responsibility with respect to common areas. Common area falls in joint and several responsibility. All the decisions taken, how that area will be audited, and all the planning, all the decisions and planning of that area will come under joint and several responsibility. If any matter was allocated to auditor, but he comes running that I am not able to handle it, please put in common area. and if people agree, then even that will come. Example, auditor was given. Auditor, for example, a auditor was given responsibility to audit of a foreign branch. A foreign branch was allocated. Then he saw that lot of different businesses are involved, lot of complications are there. So he comes back running to other joint auditors that, listen, there's a lot of complexity. I will not be able to do audit on my own. Let's put it in the common area. And everyone agrees. So even that will come in joint and several. Common area comes in joint and several. Decisions and planning come in joint and several. Agreed matters come in joint and several. Then financial statement related. Statutory compliances, all the legal requirement of financial statement, whether Schedule 3 is followed or whether RBI circular is followed, whether IRDA regulation with respect to financial statement is followed, that is a joint and several responsibility. Presentation and disclosure. Presentation and disclosure. Presentation and disclosure. Presentation and disclosure will also go in joint and several. So common area goes in joint and several. Financial statement related 2 points go into joint and several. Audit report, whether audit report is as per law, rules, regulations and professional standards, and ICI pronouncements, when professional announcements are called pronouncements, again that goes in joint and several. So common area, common area related points, financial statement related points, and audit report related points, joint and several. What goes in separate responsibility? All the allocated areas, divided areas. Risk assessment of allocated area, separate responsibility. Understanding internal controls of the divided areas, separate responsibility. Decide planning and execution of nature, timing, extent of divided areas, separate responsibility. So first risk assessment, then internal controls, then nature, timing, extent of audit procedure, that is a separate responsibility. And now comes the most important thing. Now comes the most important thing. They are saying that when it comes to common area, planning is collective. Planning is collective. Planning falls under, planning is collective, and planning falls under joint and several responsibility. Planning falls under joint and several responsibility, guys. It falls under, okay, it falls under joint planning, it falls under a joint and several responsibility. It falls under joint and several responsibility, guys. Okay. But then for joint and several responsibility, okay. But execution is a individual responsibility, it is a separate responsibility. So whatever decisions you take, planning you do about the common area, that is a joint responsibility. But the execution of that is a separate responsibility. So it's a lovely case. Here you will say that firm which didn't, okay, firm which didn't execute the common plan will be held responsible. So planning is collective, but execution is separate. Planning is collective, but execution is separate. That's the most important thing, guys. That's the lovely thing about this question. Okay. So you explain the joint responsibility, you explain the separate responsibility, you discuss the case, and then you say that execution was the problem. It is a separate responsibility. Only that particular firm will get responsible. Guys, that was a lovely question. Lovely question. Okay. Amazing question that was. Now next is, let's understand this, guys. Now, again, a beautiful question. Uh, let's see the second one. It is coming from study material. It is coming from study material. It's a wonderful question. Okay. So what they've done, they are joint auditors. They say that okay, consolidation of the branch. They have said that consolidation of the branch accounts, branch trial balances, and consolidation of the branch financial statement, branch trial balances. Let's put consolidation in common area. They are putting consolidation in the common area. That is absolutely fine. Okay. They are saying that let's allocate branches, and they're allocating the branches. They're allocating the branches, and they're saying that branches should be the allocated areas, divided areas. So consolidation will go into common area and branches will go in the allocated areas. Okay, that looks absolutely fine. That's pretty logical that consolidation go in common area, because a lot of everything will be involved, and then branches go into the allocated level, divided areas. Great. Then next is, one of the auditors identifies that there is a problem, there is an irregularity, that internal control system, there is a problem. One of the auditor identifies in a large branch that there is a problem with internal control system, and he says that he wants to report there is a problem. Then all the three, they should sit together, and the other two explain that, listen, uh, let's not report it. As per majority, two of us are saying that let's not report it, it is not required. So they follow majority rule for the reporting. They follow majority rule for the reporting, and they don't report it. Now that's wrong. In joint audit, if there's a difference of opinion, we don't follow majority rule. Separate report should be made. The people who said no reporting should be done, they should make their one combined report, and the person who says that reporting should be done should make the separate report. So here they are going wrong. They are using majority rule. This is where they are going wrong. Now what happens later on? A fraud is detected. Exactly, a fraud is detected in that particular branch, and because of that particular deficiency. Now who will be responsible for this? Who will be responsible for this? Who will be responsible for this fraud? Whether all of them will be responsible, only that concerned person will be responsible. So here guys, you have to explain three things. First, you explain, yes, as per SE 299, division of work should be there, common areas and the divided areas, it should be there, it should be discussed, it can be different bases, it should be documented, it should be signed. You are supposed to explain about division of work. In case discussion, you say that they have done proper division of work, no issues with that, no problem with that, nothing, no problem. Then you're supposed to explain. Before report finalization, joint auditor should meet and discuss. Before report finalization, joint auditors should meet. Joint auditors should meet and discuss their opinions and try to agree on the opinion. If they agree, make a combined report, that's it. If they don't agree, majority rule doesn't apply. Separate reports need to be made. Separate report needs to be made. There should be OMP, other matter paragraph. In combined report, you will say that there is one more report. You should read about it. In separate report, you will say there is one more combined report. You should read about it. They should refer each other. So people study both the reports. You explain that, and then you explain in discussion that here they are going wrong. Then you explain about the responsibility. You explain about the joint responsibility and separate responsibility. You explain about the joint responsibility and the separate responsibility, and then you explain that this area was allocated to him. This area was allocated to him. This area was allocated to him. It was his responsibility to audit it, to get all the frauds, to get all the misstatements, frauds and errors, and to report it. So concerned joint auditor didn't report it, he will be held responsible because it was allocated area. So beautiful, you explain about division and discuss the case, reporting, discuss the case, responsibility and discuss the case. Okay. So majorly it was about two things. Now the above question is on the same lines. Above question is on the same lines where all the joint auditors have their different actuaries. They are having different actuaries. They are having different actuaries, and they are having different actuaries, and they are two of them are following one actuary, and one of them is following other actuary. Again, you explain about the again you explain about joint response about again you explain about joint responsibility and separate responsibility about the reporting, and you explain that it is absolutely fine. It is absolutely fine that people have separate opinion. Two different reports should be made. Simply discuss and explain. Two separate reports should be made. Okay. Now they're also they are also talking about actuary. You may include reference of you may include a you may also discuss how to evaluate the work of actuary. You may in short you may also discuss how to evaluate the work of actuary. You may. Okay. Okay, let's freeze, guys. So it's again a very good question that they're focusing on 3 points. We're supposed to explain those 3 points. Now, difference of opinion amongst the joint auditor. This was targeted difference of opinion amongst the joint auditors. This was targeted in the study material. A question was introduced in study material. So one person is having a different opinion. One person is saying there is a material misstatement. Other two are saying there is no material misstatement. What will happen? Very simple things, guys. It must be there in your concept book. Before making report, go and discuss things. If they agree on one thing, make a common audit report. If they don't agree, make a separate audit report and put a OMP and refer each other. Put a OMP and refer each other. Okay. So guys, we are through with one more lovely essay. So these are very interesting standards on auditing, guys. Very interesting cases. If we catch hold of these individual questions and love and learn from them, okay, lot of conceptual clarity will come up. Lot of confidence will come up that we can answer these questions easily in a proper way. Now, guys. Okay. Now 402. So Mohammed Sidullah said just complete the Hindi version. That's really great, Mohammed. I'm happy. And Impact Commerce says Hindi version. What's the time? What's the time? It is 8 o'clock. But then please be connected to Audit Guru Telegram channel. We may change the timings. We may change the timing. We are thinking about it. We may change the timing, guys. So please be connected to Audit Guru Telegram channel. Audit Guru CA Ravi Taori Telegram channel. If there is any change, if there is any change in the timing, if there is any change in the timing, you will come to know about it. Okay? You will come to know about it. You will be informed about it, guys. Just a minute, guys. Just a minute. Just a minute. Just a minute. It is 8 a.m. It is 8 a.m. Okay, guys. Now let's come to 402. 402, a lovely standard again, and it is on outsourcing. If any company to outsource its work to any organization, then in that case, that means the entity is taking services of the outside organization. So whenever outsourcing is done, that means we are taking services, companies taking services of the outside organization. The organization which is giving services, it calls service organization. It is called as service organization. And the organization which is taking services, it is called as a user entity. It is called as user entity, guys. It's called user entity. So two types of organizations are involved. Two types of organizations are involved. Two types of organizations are involved. So let's see an example, and then we'll connect to the question for then. So in this case, our user entity is taking salary processing services from them. So they are called user entity, and the people who are giving it, they are called service organization. User entity auditor is called as user auditor, and SO auditor, service organization auditor, is called as SO auditor. Service organization auditor is called as SO auditor. Okay. Now let's further elaborate this example. This will be very interesting. This will make base for complete 402. You will be able to understand a lot of things in SF 402. So earlier user entity used to have its own department for salary processing. There were around 15 people who used to work in that department, but now those people are transferred to other departments and location. There is no salary department. So earlier there was salary department, now there is no salary department. There is only one single clerk. He makes all the documents in triplicate. There's an appointment, he will make document in triplicate. There's a promotion, he will make it triplicate. There's a retirement, he will make in triplicate. There is termination, he will make in triplicate. He will make documents in triplicate, review them properly, puts his signature, then goes to HR head. HR head and team reviews it, again put their signature. So there's a maker and there is a checker. There's a checker, HR people are checking it. HR people are checking it. And then we have CFO also checking it. CFO is also checking all the important and big changes and again putting its signature. Now, one copy is retained by the company. One copy is written by the entity for them. One copy is given to employees. This is your appointment, this is your transfer, this is your retirement, this is your termination. One is given to employee. And one copy along with other details. Step number 4, it is sent to service organization for processing. So these are the 4 steps. These are the 4 steps which are being done by the user entity. The clerk, the HR, the CFO, sending of the documents. 4 things are done by user entity. Then in service organization, we have Naresh, who opens the letter, who opens the envelope, and he says how many letters are there, what is the information. He give a call to clerk. uh, only 4 appointments. Okay, 4 appointments, 2 transfer, 1 termination. Okay, that's the more information. Okay, done. This is called interaction between the service organization and user entity. More is the interaction, more is the communication. It is good for internal control system. Less will be the misstatements. If more is the communication, less is the misstatement. So Naresh is interacting. Mahesh is converting those physical documents to electronic form. Jignesh is uploading and processing it. There is a complete database of the company, is uploading the changes and processing the salary for the month. Ganesh is evaluating the final output, and after evaluating everything is fine, he is sending a secured mail. So step number 5 to 9 are the steps at service organization. These are called steps. These are called steps. These are called steps to service organization, guys. These are steps to service organization. And then step to service organization, and then we have, and then we finally have step number 10. Step number 10, management feels that there is always risk. Management feels, okay, management feels there is always a risk. Management feels there is always a risk, guys. Always a risk involved. Okay. There is always a risk involved. Always a risk involved in outsourcing. Always risk is involved in outsourcing. So they are applying their internal controls. So whenever they get the process salary, they match it with the master file where the number of employees are all good. They recompute salary of the 10 employees. And they make a 5-month graph whether everything is fine, where there is unusual changes. Now listen. Now step 1 to 4. Step 1 to 4 is happening at user entity. Now listen carefully. It is called complementary user entity control. User entity control which are helping service organization. User entity control which are helping service organization. User entity control which are helping service organization, which are helping service organization. They are called complementary user entity control. They are called as complementary user entity control. Okay, that's very important. Complementary user entity control. Because of these controls, service organization is able to do proper processing. They are able to do proper processing, guys. Now we have step 5 to 9. They are called internal control systems at service organization. They are called internal control systems. At service organization. And then finally we have step number 10, that is called internal control system at user entity, which checks whether there is a problem with the processing. This is called relevant control which compensates the outsourcing risk. They are called internal control system at user entity, guys. Okay. So if you see in this diagram, there are 3 types of controls: complementary user entity controls at service organization, internal controls at user entity. Now, what is the question? After understanding this background, what is the question, guys? Let's understand what is the question. Let's understand what's the question. So we have a background of this standard. The question is, if you go to audit, if you go to any audit, okay, if you go to any audit and you see that the outsourcing has happened, you see that the outsourcing has happened, guys. If the outsourcing has happened, okay, then what information should be collected? What information should be collected? They are talking about assessment of services. It simply means what information will you collect about this outsourcing activity? What information you will collect about this outsourcing activity? What information will you collect with respect to services which are taken? Then what will be the source of information? What will be the source of information? What will be the source of information? What source of information? From where are we going to get this information? And if we are unable to obtain sufficient appropriate information from the user entity, what to do next? What to do next? Okay, what to do next? So guys, three questions are there. Three questions are there. Three questions are targeted here. Let's see one by one. Point number A and point number C, they are very popular. They are there in our CA Institute study material. Point number B, we will study from the question bank only. It is not in the question, is not in the study material. We'll study directly from the question bank only. Let's understand this, guys. So concept number 402.140. Okay. So when you go to such assignment, what understanding you should obtain? What understanding you should obtain? It's also called risk assessment procedure. Risk assessment procedure is nothing but collecting information, obtaining understanding. It is nothing but collecting information, obtaining understanding. Okay. So what information will you collect? Let's see, guys. What information we are going to collect. Okay. Now, let's understand this. Now, we have done grouping. First, we are supposed to obtain understanding of the services. First, we are supposed to obtain understanding of the services. Okay. Understanding of the services. Then we are supposed to understand service organization. And then finally, internal controls. Okay, let's understand. Let's see one by one. First thing we are supposed to understand nature of service. Is it with respect to purchases or production or packing or dispatches or recovery or accounting or salary? First, understand the nature. And is it significant? Anything which affects the production and the revenue, that is significant. Understand the nature of services. Is it significant? And what impact it has made on organization. Earlier there was a department for salary processing, and now this work is given to the clerk. Okay. So first, understand the nature of service and related things. What is the nature of service? What is the significance of service? What is the impact of the service? So the whole thing is about service. Then the next important thing is, what is the nature of transaction balance and disclosure it is affecting? What is the nature of transaction balance disclosure it is affecting? Which transaction balances and disclosure it is affecting? Okay, is it now this is the salary process. It is affecting salary account, bonus account, commission account, overtime account, leave encashment, gratuity, provident fund. Make list of all the transaction balance and disclosure it is affecting. Understand the nature of transaction balance disclosure and also understand its materiality. How big are these? So understand the service and its impact, understand the TBD and its materiality. So when you think about services, you think about two things: nature of service and rated points, nature of TBD and rated points. Then you go and understand service organization. What is the relationship? What is the relationship? Is it a group company? Is it a group company? Or is it an outside company? Are we having agreement or contract with them? Are we having MOU with them? Are we having memorandum of understanding with them? Okay, what kind of relationship we are having with them? And what is the degree of interaction? What is the degree of interaction? What is the level of communication? What is the level of information sharing? How frequently they share information? That degree of interaction is important, and how it is incorporated in their internal control systems, because it makes internal control system effective. If there's more communication, there are less chances of material misstatement. Risk reduces drastically. Understand the relation, understand relationship with service organization, understand relationship with service organization, and also understand the degree of interaction also. Understand the degree of interaction also. Then the next thing is internal controls at user entity. Next thing is, we are supposed to understand three things: service and related points, service organization related points. Then we are supposed to understand there's always a risk involved in outsourcing. What internal controls are established? What relevant internal controls are established by the user entity to compensate this particular risk? Understand that. So this is the understanding we are supposed to obtain. Okay. Now, from which documents we'll get this understanding? From which documents will be getting this understanding? See guys, here it is. From which documents we'll get the understanding? These are the points. Again, no need to remember everything guys, just in a flow. The most important thing is contract. If there's a contract between the user entity and service organization, that can be a big source of information, the biggest thing. Then below that, if there's a system overview, if there's some flowchart or some flowchart or system overview, that can be a big source of information. If there is a technical manual of how things work, that can be a good source of information. If there's some user manual, that can be good source of information. If there's a report from service organization, that can be good source of information. A report from service auditor can be good source of information. Apart from that, whether there's any internal auditor's report, that can be good source of information, or anything else, or management letters. If there's some communication about internal control system, there are management letters, that can be good source of information. See, it's in a sequence. The biggest is the contract, below that system overview, below that technical manual, below that user manual, below that report from service organization, below that report from service auditor, below that internal auditor, and so on. That can be the source of information. What if? So it is given, the text which is in the blue, it is a summary. Text which is in the blue, it is a summary guys. It is a summary. It is a summary of important things. Okay. And the next is, what if the understanding is not sufficient? Okay, that's very simple, straightforward. Now we went to user entity, but we were not able to get sufficient information. There was no proper contracts or no proper system overview or technical manuals or user manuals or report from SO or SO auditor. We are not getting enough information. What to do? In this case, we can do these things. From easy to difficult, directly put a mail to service organization that we want to understand what you do exactly. Please tell it to us. or ask their auditors to provide type 1, type 2 report. Report which is prepared by the service organization auditor, that's called type 1, type 2 report. Get type 1, type 2 report for us. Get type 1, type 2 report for us. Or we appoint some auditor. Okay, we appoint some auditor that, come on guys. Okay. We appoint some auditors that you go and do checking on our behalf. And the most effort is we personally visit the service organization. Easiest is put a mail to them, then more ask them for type 1, type 2, more appoint someone, more you yourself go. So this becomes a very, very important question. This becomes very, very important. This becomes very, very important. This becomes very, very important question. What information should be collected? What is the source of information? And if you are not getting enough information, what things can be done? Has been repeated so many times, and now this has come in study material also. Last question for this standard. So this is coming in November 20 RTP, November 21 mock, May 21 mock, November 22 mock. We are going to do few more questions of the next chapter, and then we are going to stop. So it will take us around 10 minutes, 10 more minutes maybe, 10 more minutes and 10 more minutes, and then we'll stop, guys. Okay. Again, for those who wants to watch the Hindi lectures, you can definitely go to the Hindi section. The Hindi video, this is exclusively for the English students. This is exclusively for the English students, for the South India students. Okay, for those who are comfortable with English overall. Now, a very interesting question again. So, audit report is prepared. During the course of audit, we refer to we studied and used the type 1, type 2 report of the service auditor. Now, unmodified audit report is prepared, and junior has put a reference that we have used type 1, type 2 report of the service organization. Senior says that remove this reference is not required. So who is correct? Senior is correct or junior is correct? That's the question. Now, listeners, it's very simple. So we will say that, listen, SA 402 is applicable, and in 402 there is a discussion on reporting. And what it says, number one, it says that in the course of audit, if you are not able to collect sufficient appropriate audit evidence about the matter involved about the outsourcing thing, then you will have to qualify or give disclaimer. If you got all the information, there are no material misstatements, you want to give unmodified opinion. If you want to give unmodified opinion, we don't have to give justification. If you want to give unmodified opinion, you don't have to give any justifications. You don't have to give any kind of justification, guys. Okay. So no reference is required. No reference to type 1, type 2 report is required. It's a clean opinion. But when you modify, you have to include reasons of modification in basis of modification section. In base of modification, you have to give reasons. You have to justify why you have modified. If you feel the reference will give more clarity, you can definitely give reference. So reference can be given in modified report only. But then, even if you give reference, the complete responsibility will be yours. Even if you give reference, complete responsibility will be yours. Your responsibility will not get delegated. Your responsibility will not get delegated, guys. Okay. I hope this concept is pretty clear. So senior is correct. In unmodified report, no need to give any kind of reference. So guys, let's see few more questions of the next chapter. So I used to think that I will be able to cover a lot of questions, but then because these initial chapters are based on some complicated standards on auditing, that's where we are getting more time. In the upcoming lectures, we will be covering more questions in less time. When the standards on auditing ease out, we'll be covering more things in less time. Okay, guys. So it's going to be somewhere we are going to cover less questions, somewhere we are going to cover more questions. Now, quickly, let's see few more questions, guys. Few more questions quickly. That is overall audit strategy. Let's understand. So in planning, first we make overall audit strategy and then we go for audit plan. Okay. In traditional theory, pre-standards on auditing theory, instead of writing overall audit strategy, they write overall audit plan. They write the word overall plan, and instead of writing audit plan, they use the word audit program. But they're synonyms. They mean the same thing. So please understand that. So the first question is, if you want to make strategy, what factors will you consider? If you want to make strategy, what factors will you consider? Steps of making strategy. There are no such steps. There are only factors. But then you need to understand they're talking about steps. But you only talk about the factors. You are only talking about the factors. Okay. So there's a shortcut APSE.180. Okay, guys. Let's understand. Rose is the shortcut. When you make strategy, we have to make strategy of resources. What will be the team size, how many seniors, how many juniors, how many managers, how many assistant managers, how many qualified, how many articles. So you have to make strategy with respect to resources. Then objectives. You need to clearly describe in strategy what are the reporting objectives. The overall objective is to give opinion whether financial sector as per applicable framework, if there is a fair presentation framework, whether it gives true and fair view. Explain what is overall objective. What will be the format of report? When this report needs to be given? Also, along with that, what should be strategy for communication? What is the nature of communication required? What will be the nature of communication and how frequently communication within the team? How frequently communication with other auditors? How frequently communication with management, and so on. So strategy for objectives, reporting objectives and communication should be there. Then S stand for scope. We need to understand characteristics of the entity. We need to understand the business, we need to understand the industry, the business, the kind of systems, and after understanding the characteristics of the industry, business and the entity, then we need to carefully decide scope. Scope means what? Range of activities which we perform. In audit, that's called scope. So scope means two things: what we check and how we check. Then we decide the scope, what branches will be covered, what branches will be left out, how they will be checked, about the scope. And then efforts. Then there are factors which have significant impact on the efforts of the audit team, like the maturity level has a significant impact. What will be the audit risk? There will be significant impact. Decide those factors while making strategy. Finally, evaluate. Before planning, we go for preliminary engagement activity, PEA. We decide whether to accept or not. Then whether will be ethical or not, and then we sign engagement letter. So whatever point you have understood from there, make strategy for them also. Let's freeze, guys. When you make strategy, make strategy for Rose point, make strategy for resources, make strategy for objective, reporting objectives and communication, make strategy for scope, understand the entity and make strategy for the scope, what will be covered, what will not be covered, and how things will be checked. Then make strategy with respect to factors affecting factors having significant impact on the efforts, and then make strategy with respect to evaluation of preliminary engagement activity. Okay, so this is a very famous question. It is asked. Now let's see, guys. Now, this is a lovely question, guys. This is a lovely question. Last few questions to go. Last few questions to go. This is a lovely question. Let's understand, guys. So, first we make strategy and then we make plan. I'm just giving an overview. You make plan for three things: plan for risk assessment procedure, then you make plan for further audit procedure, and if required, you make plan for other audit procedure. You make three plans, and in each plan, you decide NTE, nature of checking that will be performed, timing of checking, and extent of checking. In what depth, what will be the sample size? Very interesting. In this, they are saying that a chart accountant has made a plan, but he has not decided the sample size. He says that I will decide sample size at the time of execution, whether his approach is correct, his approach is wrong. As per SA 300, first we make strategy, then we make plan. In plan, we have NTE, nature, timing, extent of the procedures we are going to perform. Sample size is the extent of audit procedure we are going to perform. It should be there in the plan. It should be there in the plan. If sample size is not in the plan, if sample size is not in the plan, okay, if sample size is not in the plan, that means it's a non-compliance of SA 300. You are not complying with SA 300. So guys, I hope you understood this. See, this is answer as per ICI and this is our explanation. So you can follow any of them. Then what is relationship between audit strategy and audit plan? Very simple. The general relationship is first we make audit strategy, then we make plan. First we make audit, then we make plan. If there is a change, first we change audit strategy, then we change audit plan. But sometimes there is an exception. Sometimes we can change audit plan first and then strategy. Suppose we feel in some factory there is a fraud. We may allocate two of our team members and give them 3 days. Go and understand whether their indicators of fraud are there. If the indicators of fraud, will change the strategy. Sometimes this may happen. We change audit plan first and then strategy. Anyways, both are closely connected to each other. There's an example given. That if there is internal control system is weak, then we'll increase the risk and perform more audit procedure. If the internal control system is weak, we'll increase the risk at strategy level and perform more audit procedures at planning level. Always keep in mind materiality. Material things should be given more importance, less material things should not be given more importance. Always think about materiality. Quickly, guys. Now this is very interesting, very interesting case. Very interesting case. Now what is this case? So Nikita is a chartered accountant. She is doing audit of NPO, non-profit organization. And while doing audit, she sees that a lot of foreign contribution. So there is FCRA, Foreign Contribution Regulation Act. She increases her audit procedures. She does very good audit. She documents what audit she did, what is the outcome, everything. She didn't document any audit strategy. She didn't document any audit plan. She didn't document any audit strategy. She didn't document any audit plan. Nothing was documented. Is this approach fine? She is documenting audit procedures performed, but not this. This is not correct. There is a SA 300 which says that overall audit strategy should be documented. You explain what do you mean by audit strategy. Broad guidelines, key decisions on how audit will be performed, and write those rows points one by one. We need to document audit plan. Explain there are 3 types of audit plan. We need to document all the significant changes. So in this case, she is not following SA 300. She is not document strategy, plan and changes. Should have done that. Even the changes should have been documented. So what are the changes? What are the reasons for making changes and how the changes were done and executed? Everything needs to be documented. So changes should be documented. She is not doing that. That's wrong. Okay. Last few questions, guys. In fact, okay. Last few questions. Second last question, guys. Understanding the nature of business. My goodness, this chartered accountant is not visiting the office. This chartered accountant is not visiting the office. This chartered accountant is not visiting the office. He is simply asking for all the documents on email. He is not visiting the office. He is not understanding the business. he is using some standard checklist which is not relevant. They are in the business of commodity futures trading, and in his checklist he is talking about cost of material consumed and manufacturing and stores and spares, etc. So his checklist is not relevant at all. Please comment. Okay, so let's see. SA 300 says that SA 300 says that when we decide overall audit strategy, we understand characteristics of the assignment, then we decide the scope. What is the nature of industry? What is the nature of nature of industry? What is the nature of industry? Then what is the nature of industry? Then what is the nature? What is the nature of the business? Nature of internal control system? Then we decide our strategy. So understanding the business is a part of planning. It is a part of the planning process. It is a part of the planning process. We have to document what is the strategy, what is the plan, what is the changes. Formulating audit program, there's a traditional theory which says that yes, we need to understand the business. We need to visit the offices. If there's a manufacturing, we should visit the factory and then make the audit program. In this case, we can clearly see there is no understanding of the business. In this case, we can clearly see there is no understanding of the business at all. There is no understanding of the business. Okay, the person has not obtained any understanding of the business. Documents are not reflecting any understanding of the business. There is a very general checklist which is not relevant. There is a very general checklist which is not relevant in this business. Conclusion: it's a complete non-compliance of SA 300. You are not understanding the business. That's a blunder. You are developing audit program without understanding. Again, it is a blunder. Not understanding the business, not documenting it. It's a big blunder. It's not proper planning at all. It is no proper planning. So you need to give these references and then you can construct a very good, beautiful answer, guys. Last thing before we end this session, guys, do share these videos with everyone. Give your feedbacks, guys. Give your feedbacks, your views. Those are really very, very important for us. Please do that, guys. Now, this is a very useless question. I am surprised how it came to new course. Very useless question. So there is a multiplex. Draft a audit program for a multiplex. First, you'll explain general points, understand the legal constitution. If it's a company, catch hold of MOA, AOA, understand the MOA, AOA, what kind of activities they can do. It's a general point. For income, you explain they can earn 4 types of income. The major income is sale of tickets. So internal control system with respect to sale of tickets should be understood. Are they sale of tickets? Whether it is a pre-printed tickets, numbered tickets, whether the tickets are properly checked, collection is done, show-wise reconciliation is done, then online ticket sale, there should be proper internal control system. So first you talk about sale of tickets and there are good internal controls. Next major revenue is advertisement. Whether the advertisement agreements, registers, how frequently advertisements are shown, whether proper billing is done. Next is revenue from the restaurants, cafes. What kind of understanding is there? Are you sharing? Are you giving it on rent? Are you sharing revenue or you are yourself running it? Check it. Next big revenue is parking. Parking, how the revenue from parking is collected and how much share belongs to you. So you simply talk about 4 major incomes. That's it. 4 major income, it's in a sequence. Then you simply talk about 3 major expenses. The biggest expense is distributor. You buy films from the distributor, guys. You buy films from the distributor. That is the biggest expense. You talk about that how much payment was done to different distributors. What are the terms? Is it a fixed payment? Is it a revenue sharing? Okay. And whether this advance is given to distributor, it should be written off regularly as an expense. And if there's an old outstanding, whether it should be written off. So you talk about the payment to distributor. Second big expense is maintenance of the facilities, of the building, furniture. A lot of expense is incurred for that. So go and see the respective bills. And then payment of salaries, how many staff, what is the salary and so on. So guys, we'll stop here. We'll stop here today. We have in totality covered 40 questions, but then the initial standards are little complicated. It is little challenging. So we have covered 40 questions. As we go ahead, we'll be covering more questions. Please stay connected to Audit Guru Telegram channel. There can be change in timings. So you will be able to know about it only when you are connected to Audit Guru Telegram channel. Audit Guru, simply type Audit Guru. Okay. Okay guys, bye bye everyone. Do share it with everyone.